Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate with your host, Kevin Perenio. As an owner and C-level executive for 20 plus years in finance, KP is here to serve you with all of his knowledge and experience. Whether you're a broker, realtor, or just interested in the economy, this is the podcast for you. So let's get started. Here's your host, Kevin Perenio.
Hey, it's KP coming to you live from San Diego, Coronado Island to be exact. We got Point Loma in the background there, gorgeous moon, sunset. We're here at the Mortgage Bankers Association, the IMB show. This is the Independent Mortgage Bankers show. The Mortgage Bankers Association is the trade organization that looks after all business models, all institution types, all channels, and everywhere across the country. And they're based in DC, so they are do a couple conferences a year. And the first one they kicked the year off with is the IMB, the Independent Mortgage Banker, and they're doing it from Coronado Island. I'm at the Del Coronado. And they have this new little hotel wing that they created. It's called like the Shore Room or something. This guy. He didn't think he was going to get on there. There's Jay. He's our correspondent channel director, Jay Bond, and he had this nice little suite here on the end. Shit, I probably should have stayed here. Anyway, had a couple meetings here today, and had some speakers kick off today. I'm going to try and hop this fence while I'm filming, so this could get real dangerous. But the Independent Mortgage Banker Show is very unique in the fact that we've got guys that film videos and try and hop over fences here. Sorry about that. Giving you the double chin there. Give me a second. Wow. Okay. I did it. Anyway, I saw Stan Middleman on a panel with John Hedlund, Chrissy Rhea, and Mike Frattantoni was moderating. It was actually really good. It's funny. I've been saying this thing all year, like, we all have to work twice as hard for half the money, and you got to work 4 times as hard to make the same amount of money. That's how the last 7 months have been. Stan, it was funny, he said everyone's having to work twice as hard for half the money or to lose half as much, which is interesting because a lot of people have been having to invest these last 7 months in this challenging market that we've had. Very insightful stuff, great show, had some fantastic meetings with some great partners of ours. Total Experts here, Halcyon is here, fantastic IRS API integration for like your tax data. Can't wait to see the GSEs push that. Everyone's talking about the FHFA that regulates Fannie Mae and Freddie Mac and the new LLPAs that they put out, which includes a debt-to-income ratio hit, an adjustment to loan pricing at the loan level for debt-to-income ratio over 40%. I mean, that's impossible to manage. I mean, I get it, but that is literally impossible to manage. I don't know what. The good thing is the Mortgage Banker Association, Bob Brooksmith, Pete Mills, and team, they're going to push back on that. I don't even know how anyone thinks it's even possible on a process-wise. Income documents change. They go back all the time. You're adding borrowers, all kinds of stuff. By the way, here's that new wing. It's pretty cool. Look at this. I'm not trying to do an advertisement for the Del Coronado Hotel, but the Hotel Del, but it's pretty nice. I'm about to walk over to the traditional part, haunted part. Anyway, so that was a big topic of discussion, and but I think with rates are generally coming down. I mean, you've been watching my videos, and I thank you and apologize at the same time. But we've been talking about peak rates and peak inflation since the November 10th CPI report that came out, and it's a bullish call, but the data is the data. Rates are getting better. The 10 years at 350 traditionally is very interesting. Traditionally, the spread between the 10-year Treasury and the 30-year fixed mortgage is 1 point. Pre-COVID, 100 basis points. So if we're at 350 on a 10-year today, we should be at 4.5 on rate. But we're at 200 basis points spread since COVID, because of all the volatility, because of so much money in the system and inflation and are we in a recession? Are we not in a recession? Uncertainty versus certainty. So, a 350 today, we're at the 5.5 coupon that's being traded, though in a quarter for servicing spread, you're at 5.75 rates on the low end. So if the 10-year comes down to say 280 or even 300, and the volatility comes down, which should happen after the Fed stops tightening, and you get back closer to 100 basis point spread, you're going to look at rates in the fours before we know it, without the Fed cutting rates. So, look, tons of business out there right now, even a $1.7 trillion a year next year, or this year, 23, with a ton of purchase business, mostly in purchase business. I think everything's going to surprise the upside positively this year, because last year was so bad. And one contrarian indicator to that I read in Stansberry research today is very interesting. They said to get very bullish on housing because the pending home sales data that came out is the second lowest read it has ever been. And the only time lower was the Great Recession in 2008. We're not in a recession like that. We're in a recession because of inflation and tons of cash, which the Fed is now managing, and demand is coming down, and a soft landing in the economy is possible. Here's another gorgeous view for you. There's the flagship steeple. I think there's ghosts up there or something. I don't know. I didn't take the tour, but come on, man. Turn your lights off. I'm trying to do a video over here. There's helicopters, tons of military drills going on over here. You can hear in the background my AirPods. Anyway, contrarian indicator that every time the pending home sales data bottomed, the market rebounded. And we're at the second lowest reading ever. So it could still go lower, but the odds are the market's going to rebound in a positive manner in short order with that contrarian indicator. Okay, one last thing. Happy Lunar New Year. The Chinese calendar, lunar New Year, many cultures in Asia celebrate it. It is based on a lunar calendar, which is 13 months, and the first new moon of the year, which you can see that little bad boy just started right there, okay? And I know it is the year of the rabbit, the water rabbit, which is, peace, prosperity, longevity, all good things, especially for us. She got her ass kicked the last 6 months in the mortgage business. We could use a nice long year of goodness. Speaking of China, $2.7 trillion in savings, which is 34% of, there's a lot of yelling going on over there. I don't know if it's military drills or lifeguards or what. Anyway, 34% is the savings rate last year in China for their zero COVID policy or lockdown. $2.7 trillion were saved at 34% savings rate. JPMorgan Chase estimates that there's over $860 billion in excess money by Chinese citizens ready to be spent. So much like how the U.S. had a really high savings rate, which gave us a nice little boost in GDP, we might see a nice little boost from China in GDP, which could impact the price of oil and commodities and goods and all kinds of stuff. So the China effect is real and should be a positive thing. Anyway, hope you enjoyed. Here you go. Get Point Loma one last time here. Get my little head out of the way, and you can check it out. And, we'll get another update out to you probably later this week. I do have a KP Talks video that just came out. I try and post it, link below. Certainly, we'll try and do it again on Thursday. Have a good one. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.